Hey everyone, how y'all doing? Today I took a short and it was within the 10 hour, 10 a.m. And I was waiting for displacement after buy side liquidity was taken. So right here I'm just entering two positions on the up close candles. My original target was the sell side liquidity found at the original consolidation found in London. Now right here, I'm just getting an idea of how I'm going to frame the risk. I wanted to see the first fair value gap stay open as a breakaway gap, but also I know that wicks can color outside the line, so I just wanted to make sure this position wasn't going to be stopped out early. I'm getting quadrants on the SIBI here, and I'm wanting to see price stay below consequent encroachment of this, just so I'm able to have a read on understanding that this was going to be bearish. And anything below and the gap being unfilled or the body staying below consequent encroachment, it's just giving me feedback that I'm on side for being bearish. I've got some standard deviations ran, just perfect how it's lining up with the second deviation. Once we left this fair value gap, I was comfortable with moving my stop loss. Any wick that I see on the 1 minute chart, I'm drawing out. This is a very quick, easy day. Also using the 950 macro. This is what I was waiting for, was a separation and repricing below the consequent encroachment of that wick. Once the body was laid across it and closed, I was on side. So right now I'm just taking a look and seeing how we ran relative equal highs from yesterday, and we're having a displacement leg lower. So I'm moving my stop loss just above that high there. I'm not seeing price wanting to take that high. We've already refilled the SIBI and we're leaving it. Now we're inside that 950 macro. We should see a little bit more speed coming through with price. I'm measuring that wick and putting my stop loss above consequent encroachment in the upper quadrant. I'm drawing out these busies so that they replay the roll into being inverted. So in the 1 minute chart or any chart, I'm going to see how price is reacting to the midpoint of these fair value gaps that are being inverted. The roll is inverted because if any other kind of bullish market, these would support price, but now they're acting as resistance, almost like stepping stones for price to reprice lower. Excuse me. So since we've moved away, we have two liquidity pools. We have that short-term low, and then we have the long-term low. So I'm comfortable with moving my stop loss to break even. Some things I wish I could have done differently in this trade was not move my stop loss just a little bit too little bit too close to where price was. I could have waited and just held on to it longer. But also, I'm very proud of myself for holding on to trades that are longer than 10 handles. I've graduated so much into getting 200 tick, 180 tick runs just a couple months ago. And a year ago, I was only holding on to 60 ticks. I was scalping. So this is just drastic, improvement for me. And so I'm comfortable. I'm very comfortable taking these types of trades, even though I want in the future to hold on to longer trades. This is just building up my confidence into seeing how this plays out in the future. I love low resistance liquidity runs. It's kind of the market conditions I want to look for instead of real choppy, muddy, high resistance liquidity runs. Hope you found this video insightful. I'll see you again. Thank you.